But I would say that finding risk capacity, and not to elevate this, but is very similar to, finding a spouse or finding a venture capital firm to back you. Hey everyone, I'm Christopher Lowell.
Hello, I'm Somil Jain. We've had a few discussions in the past, and then Chris and I are going to talk about a few more things related to MGAs and insurance in general.
Fantastic. So, we've talked a little bit about what MGAs cover, what risk capacity is. The next question is sort of who provides it and how do MGAs sort of really get access to it? Samuel, if it makes sense, would you mind talking a little bit about just a recap of the different types of risk capacity provider, like insurers, reinsurers, etc.?
Yeah, I think that's a fantastic topic because we talk about this very nebulous concept of risk capacity, but do a terrible job actually identifying it, defining it, and specifying who the players are. So let's talk about that. First of all, here's what risk capacity means. Every time you write a policy, if as an MG, as a carrier, doesn't really matter. Every time you write a policy, let's say you're taking $1,000 in premium, you have the potential typically of a loss that's much greater than that $1,000, right? So if it's my auto policy and my limits are, let's say, $50,000, I could have a loss day one that costs $50,000 to the company, and the my insurance company needs to have that money sitting around to be able to pay. Now, not everybody is going to have a loss of $50,000 on day one, so it works out in aggregate, but they need to have enough capacity, and that's really what it means here, so that they can be able to write that premium, and the regulators feel comfortable allowing companies to kind of offer this future promise of being able to settle claims. So that's the idea of capacity. And there are typically a combination of insurers and reinsurers that collectively provide this capacity. And really what that means is that they have a huge, some typically hundreds of millions of dollars of money sitting around in a bank somewhere in a trusted account, so that the regulators are comfortable that in the case of an event, they have the ability that they can release that capital. So who's reinsurers and who's an insurer and who's a reinsurer? An insurer is the entity that actually writes the policy, and that's also called the paper. And that's the idea behind that, is that they have the ability to offer you this policy because they are regulated, and they are either admitted or non-admitted, but they have the ability and the legal authority to write insurance. And I think, Chris, you talked about that in the last discussion we had around exactly what that authority means and how it's regulated on state by state level and so on. Very broadly speaking, reinsurers serve as insurers for insurance companies. And the idea there is, if some of these major storms, originally the idea really was when these major events happen, wildfires, hurricanes, tornadoes, really a lot of these NatCat events, no one individual insurer has enough capacity to really be able to absorb that kind of a loss. So you create these typically global entities, reinsurers, that take a portion of this loss from hundreds of insurers around the world, and therefore they're able to better provide the ability to write these insurance policies. Typically, not typically, in every instance, you're going to need an insurer. You need at least one insurer that provides you the paper. In some instances, the insurer also gives you this risk capacity. In other instances, it can be a straight pass through. So it gives you the technical ability to write it, but they're not actually willing to take any of the risk. And you need to find a reinsurer or reinsurance panel, which is a combination of typically 3 or 4 reinsurers that collectively provide the support for all of that capacity. In some instances, the carriers, the insurers, will actually also take some of the risks. So they'll say, hey, we'll keep, let's say, 10, 20% of the risk. And then you, reinsurer or reinsurance panel, take the rest of the risk. The ratios vary. There's many different combinations. In some instances, you can find insurers that are willing to find their own reinsurers or have connections with reinsurers. In other instances, you're kind of on your own, or you go through your broker to help create all of that. So, Chris, that was kind of like the idea around what insurers versus reinsurers are. How do you kind of separate that, and who needs what? And really, the answer is it depends on every single situation. Every MGA is unique. Their needs are unique. If you are a low limit type, maybe you don't need a reinsurer. Maybe an insurer will provide all the capacity. If you are a if you are securing a risk that is typically high limits that could have this catastrophic type of potential, typically you will need to have a reinsurer or panel supporting you.
So actually, one of the things we want to chat about is where do you find these people, right? Like, where do you find reinsurers? And I called them people, but they are, entities and organizations, but there are individual underwriters at these companies, at insurers and reinsurers, who may or may not have interest or appetite for the MGA that someone is trying to build, right? And there are many different ways to find these to find capacity, right? Some are really straightforward, right? Or they're well, actually, many of them are straightforward. But one of the most popular ones is there are a few in-person events every year that are heavily, heavily trafficked and populated with reinsurers and insurers actively looking to put risk capacity at work for MGAs, right? So these are places like Target Markets, which has both an annual event, usually in Scottsdale, Arizona, and a mid-year event that travels around every once in a while. And
It's next week.
oh my God, I didn't realize that. So Target Markets.
Target markets mid-year is next week in
Excellent.
Dallas. I'll be there.
And then separately, the WSIA, Wholesale Specialty and Insurance Association, both of those act as almost sort of speed dating instances of insurers and reinsurers and MGAs meeting each other, right? And that's the opportunity for an MGA to make a personal connection with individual companies, business development leaders, and underwriters who might be interested in their business, right? Another really popular way, there's a publication called Rough Notes that every year puts out something called the Insurance Marketplace. It is a printed, an actual printed directory of as many specialty lines carriers and the lines and MGAs that they support as they can get their hands on, right? And it identifies and it gives you at least the list of names and companies that you can then go research and actively do outreach to talk to them, right? And it'll tell you the lines they're interested in, which is really helpful. Um, Over the past few years, there has been a push to try and create what you might imagine, if you're new to this industry, should already exist, which would be some sort of digital directory of capacity interests across insurers and reinsurers. Um, Pathpoint on the excess and surplus side, Steer.io. These are a number of relatively new companies over the past 5 or 7 years who are still in the process of building out a real sort of technical platform and digital marketplace of capacity, right? But they're good. They're good opportunities to both learn new names in the space of carriers and reinsurance providers, um, but also help them grow. I'm actually sort of a big fan of a digital marketplace at some point being quite easy for to find risk capacity. Um, there's also a number of platforms out there that help support MGAs in doing a number of things, including building their product, providing them a license for their product, etc. But one of the biggest things that these platforms help with is finding capacity, right? So these are platforms. There are many of them, but just to give you a sense of who they are, there's Mission Underwriters, there's Boost, K2, Tango, Starfish. It's a whole host of uniquely named insurance platforms. The Accelerant Risk Exchange, who actively try and aggregate a number of different risk capacity providers, both carriers and reinsurance providers, such that this process becomes easier for MGAs. Right? The last 5 or 10 years has been a major push to help make the industry easier for MGAs to build new fantastic products, Part of that push is Somil and I getting on the video with you right now and trying to explain it. And part of that push is a number of people building platforms that really help guide MGAs and guide entrepreneurial underwriters to build new programs. If you're thinking about building an MGA, you really want to have done your user discovery work, right? You want to go out and talk to producers about the products you're building, how they might help you distribute them, and what they see in the market. And as you are doing that, those producers, by definition, are speaking to carriers and reinsurers every day about what markets they can put this new risk that they just found and find capacity for. Right, so talking to as many people as possible, and just straightforwardly asking them, like, where do you get your capacity for this type of product? Who's interested in expanding limits from 1 million to 5 million for this type of product? People will be, usually pretty happy to share, and finding out where those folks are and doing an outreach to them is a critical path.
What is the purpose or value of, let's say, a target markets or a WIA event? Why do I need to travel somewhere why can't I just get on a Zoom call with carriers? I have my view, but I would love to hear what are your thoughts on that?
Yeah, no, it is a great question. Some people throw around the phrase, insurance is a relationship business, or honestly, probably in other industries, everyone says their industry is a relationship business. Um, but I would say that finding risk capacity, and not to elevate this, but is very similar to, finding a spouse or finding a venture capital firm to back you, right? Like although what you're looking for is risk capacity, to launch your product, as your product pivots and grows, you will want a partner that pivots and grows with you, that is open to new conversations. So you want to find someone that really feels like a relationship.
And as with everything else, this is kind of like, pseudo dating, right? So you're trying to find that right partner. So let's talk a little bit more about that from your experience. In addition to kind of finding somebody who can grow with you, who's willing to write, all the right lines and etc. Can you talk about a few more things that are relevant that help from an MGA's perspective? How do they identify who the right partner is? How do they find that right capacity partner for them?
In building a relationship, you also want to understand the people on the broader team, and the tenure with that capacity provider, right? Turnover, for better or for worse, probably is not your friend in this case, right? It takes time, effort, and energy to explain your MGA's business model, what makes you special, and what you need from a carrier. Having to do that repeatedly every year is a frustrating and time consuming process, right? So you want to find people that you can build a longer term relationship with. I know we sort of joke about it sometimes, but if you've spoken to one insurance carrier, you've really spoken to one insurance carrier. The idea that every carrier, every reinsurer is truly different. You will feel that difference as you both meet people in person, um, but as you interact with them, right? But I think there's also a meaningful chunk around understanding the long-term strategy of the carrier or reinsurer that you may be partnering with, right? You may start as an MGA actively looking for small limit, I'm making this up, small limit auto policies. However, the your long-term strategy needs to match the long-term strategy of your carrier. If you know that your intent is to grow to larger limits, make sure that you find a carrier that even now knows that a couple of years from now you're going to be asking for increased lines and increased capacity, and is comfortable saying, hey, as we grow, we are absolutely open to that type of conversation, right? So you don't want to talk about just your next 6 months. You do want to talk about your next 6 years as much as you can, to understand if you're going to grow with them or not. But actually, somehow I have a sort of question for you, which is, of all the things, so once you're you've passed the early relationship tests, and you've got, sort of three or four different carriers or reinsurers that you are in conversation with, what are the key factors to consider? Like, how should you be thinking about making this really important, decision?
Yeah, and I like your analogy around dating. So let's see how far we can take this. Okay, so so maybe it's a similar idea, right? Where you don't want a spouse every year, you don't want to be shopping for a spouse every year, right? So it's probably similar. And I'll again, I'm at some point this analogy is going to start getting weird, but let's see how much fun we can have with this. But it's the same idea, right? You could, in theory, have a new capacity provider every year, every policy year. You probably don't want that. It's going to get extremely um, painful from an expense perspective, from kind of all the operations perspective, from setting up everything, from the regulatory perspective, from your customers themselves, because you're going to have to switch them to a new policy every time, and it's going to look different. You have to tell them, hey, your old policy is no longer valid. By the way, we're switching to this new consumer, right? The new insurer. You don't want to do any of that. So I think that's one of the biggest criteria is you want somebody that can grow with you, that can be part of your plan for many years out into the future. And just like dating and relationships, like that changes, like what you kind of need from a partner changes over time, and it'll be similar idea here. So you want somebody that philosophically feels the same way about your product, and how you can grow that, because you typically start with an MVP as an MGA, and then you want to grow in different areas. So these are people that want to be able to grow with you. Doesn't always work out. Sometimes they're a good partner for the next couple of years, and you kind of have that mutual understanding, and that's okay as long as you're kind of both there. Some of the other things that I think are very relevant that I've seen is the biggest one is probably how hands on versus hands off do they want to be. That's a big one because I work with carriers or reinsurers that on one extreme will basically say, I don't really care what you do. Here's your target loss ratio. As long as you come at that loss ratio or below, do what you want. I'm never going to look into this, right? If you go above that loss ratio, we have a problem. Otherwise, you do you. There's other carriers that take a very other extreme view of that, which is they will inspect and review and comment and provide feedback and want to almost like inspect every single policy language change, every single pricing change, every state expansion. They'll want to have target loss ratios every time you grow somewhere new, and that's okay. That's part of the philosophy. Some MGAs need that. If you have a lot of internal insurance, actuarial, policy language, underwriting expertise already, maybe you go in that first, closer to that first direction where you do a lot of it on your own. If you don't have a lot of that expertise in house, maybe it is good to have somebody who's kind of providing those checks and balances for you, making sure you're not putting in language that's going to get you in trouble with regulators, with lawyers, all of that, right? So that's another area where that matching piece comes in. So all the areas that you are deficient in, make sure your spouse is able to kind of provide all of that for you. Um, One other thing that I think is really and part of that is also underwriting audits. Some insurers don't do those. Others will want to audit your book every 6 months and kind of do a deep dive into, let me see what if it's a property book, let me see all the reports you're running, let me see all the loss mitigation you've done. If it's casualty, they'll want to understand the loss history and prevention measures and all that. So it really again depends on what you are more comfortable with, what you need. It may sound to people like you want that first approach, you want a hands off carrier, but that's not always a good thing. Sometimes you want somebody who's kind of looking over you and helping you get there.
Yeah, actually, in one way that the analogy with dating probably will break down is in terms and conditions, right? We don't always have contracts, right? But in this case of capacity,
We don't always have prenups. That's right. That's
yeah.
right.
But contracts that help you understand
Yeah.
SLAs and service level agreements around underwriting referrals, right? So when you have a policy that is a little bit different than your underwriting agreement, how fast will your capacity provider get back to you? How long is the capacity commitment, as you said, good for? Right. So in general, these are 1 year policies for a reinsurer or a fronting carrier or a carrier. But now in the market, there are a few players, pushing 3 to 5 year commitments specifically. So, as a tantalizing offer, like an ancillary service that, we're going to be committed to you for 5 years. And you won't have to go back to your customers with, with a letter that says, by the way, we've changed your carrier. Because, as you pointed out, Somil, customers and clients and policyholders don't want to get a letter that they don't really understand perfectly, that just shows that something is churning, something is turning over, right? That's a frustrating lever that it sort of hurts your own branding and marketing. But are there any terms and conditions that you can think of, Samuel?
Before I even get into that, one thing I'll mention that I've also seen companies do this really wrong, which is first send the letter saying you're being canceled without then and then later saying in the letter, by the way, yeah, I know, yes, right. So if you do ever need to churn, make sure you first send a very clear letter, possibly multiple letters, clarifying that hey, you will get a letter saying you're non-renewed. Don't worry, we are already going to transfer you to this other carrier. That does happen, and there's ways to address that. As far as terms and conditions, obviously the things like the ceding commission matters, the fronting fees matters, right? Those are all very relevant things, because all else being the same, you want a provider that gives you a greater ceding commission, so you have more operating amounts money to work with, and has a lower fronting fee. But that's not the only thing. A lot of times it actually does matter how much losses are they holding on to. Are there loss corridors associated with that? Are there other terms that turn your known commission amount into more of a contingent commission? All of those things matter. One thing that I will really push on is the amount of risk in terms of premium dollars that different carriers or reinsurers want to take varies a lot. There are some carriers that will not talk to you unless you're looking at, let's call it 50 or $100 million or higher. For a starting MGA, that's not always an option. So there's only a different set of carriers and capacity providers that are willing to talk to you. If you're on the smaller side and you're willing to say, hey, this is a small program, we'll grow with you. But even there, try to be as accurate as you can around your premium commitments. Don't go ahead and tell them you're going to write $20 million of business in year one, but you can only write two. That's going to get you in trouble, because there will be, and this is where the terms matter, right, Chris? Like,
Yeah.
there will probably be language in there that says if you don't hit a certain minimum, you'll owe them a certain of fees, either a dollar amount or
Yep.
percent amount or something. So be careful. And again, like the intent there is not to penalize you. The intent there is to make sure you are projecting realistic values so that they can build in their program accordingly.
This has been a great conversation. As always, we have more to talk about than probably fits in these buckets. I can already see a future session where we sort of walk through an agreement bit by bit around terms and conditions. I think these are great conversations. Hopefully, the MJs that are watching have found them helpful. As always, feel free to reach out to Somil or myself.
See you, Chris. And I think one of the things we should start talking about next time is, if you are an MGA, what are the questions you should be asking capacity providers? I think that's a good future topic for us to get into.